11:42, and time to talk about your money here on Good Morning Quad Cities at 11. We've heard a lot about the word recession. It's been thrown around a lot over the last few months. We saw many areas close out in 2022 on the stock market in their worst conditions since 2008. So what can we expect this year? So joining us to help us sort through all of these ideas is Drew Kampmann from True Financial Partners in Bettendorf. Good morning, Drew. Thank you so much for joining us.
Good morning, David. Happy New Year.
Happy New Year. So give us a little bit of a market review so we can get a pulse of where we're at right now.
You know, there's been periods in my career where I'm happy to turn the page or the calendar to a new year, and 2022 is. I'm glad to see it's in the rearview mirror. It was a difficult year in the market. A lot of the market declines we saw was really in preparation or thoughts of what type of recession we're going to have. And we saw a market decline into bear market territory. We saw market lows in June of last year. And then we saw some market recovery through the fall. But then in December, we were right back into bear market territory. So again, we ended the year on a weak note, but we're glad to see 23 come around.
Well, so I guess if we are looking at turning the page and going to 2023, what would you say our current economic situation is?
Well, we're still experiencing high inflation, so the cost of goods and services are still high. We're seeing the Federal Reserve continue to raise rates. Therefore, things are more expensive, specifically in borrowing money. One nice thing we did see is we saw energy prices come down. So pain at the pump was reduced, but we'll see what happens into the new year here. So economically, I think the expectation is we're probably going to see some type of recession if we're not already in one, because a lot of times the market is a leading indicator, meaning the stock market, and behavior oftentimes lags. So I think we're going to see more recessionary aspects coming soon, I would say.
Yeah, and you were just saying that, you were happy to turn the page to the new year. A lot of people are saying the same. But we're still seeing those interest rates going up. We're still hearing the word recession thrown around. What do you think we're going to expect for the new year?
Well, I think, hopefully we've seen peak inflation, number one. That means that hopefully prices of goods and services are going to continue to fall. But I expect the Federal Reserve to continue to raise interest rates, at least through the first half of the year. So we may see a market really struggle through the first half of the year. But once we maybe see a Federal Reserve either go pause in raising rates, or at least maybe even changing directions, which is possible towards the middle or end of the year, then we may see a market recovery towards the end of the year and see some economic factors continue to improve.
Talking about the word recession, we're seeing people like Jeff Bezos, billionaire, coming out and having comments saying this is the year to hang on to your money. So when we look at the word recession, how bad do you think it's going to get, or will it not get that bad?
Well, a lot of it is going to hinder on what the Federal Reserve does, number one, and I also think it has a lot to do with the unemployment or the employment market. So there's some variables out there that are really going to determine which direction we go. But a couple of things that I would encourage folks to do is, don't change or alter your current savings plan, but really instead look at your current budget or your spending plan and really separate out your needs and wants and make adjustments to your spending on the wants category, because there are times like now where we may have to sacrifice in the needs because those are become more expensive, and cut some of those want expenses. The second aspect of it would be is, don't overspend and don't add debt, specifically in the areas of like credit cards. Be careful to not add debt, especially when the cost of borrowing has increased so much because of higher interest rates. So those are two things I would encourage folks to do going into the new year.
A lot of people call our newsroom and talk about their finances and say, when we have these segments, and say, well, should we be moving money around? We've been told for the last several months to hang tight, don't be making any quick changes just to be reactionary. But is now the time to be making those changes, especially after we look at last year and so many things on the stock market ended double-digit losses?
Well, I've had some calls the same thing. Should we make changes? Should I not be investing in my 401k or my IRAs because the market's gone down? Actually, it's the opposite, because if you look back to January of 2022, the market is significantly lower. So from a buyer's standpoint, the market's much more attractive today than it was a year ago. So my encouragement is continue to invest, because it's a greater opportunity because prices have fallen. It's kind of like shopping. When you go shopping, you're looking for sales. Well, the market's 20% off right now, or even some parts of the market are 30 to 40% off. So it's a great buying opportunity if you have a long-term perspective on things.
Okay. Well, how do you get someone to flip their thinking when they're losing, tens of thousands of dollars in their retirement?
It's very hard. Don't get me wrong. There's times to pivot and look for opportunities, because I think the market is providing those opportunities. If you're closer to retirement, certainly you should be a little more conservative and more preservation approach. But if you're still young and you have many years ahead, 5, 10, 15, 20 years ahead, you should continue to look for those equity positions, in my opinion, because you still want to buy things cheaper. But it really depends on where you're at in your career, how you're going to invest your money, but never stop looking for the opportunities no matter what.
All right, Drew Kampmann with True Financial Partners in Bettendorf. Thank you so much for joining us today.